right, welcome everybody. Happy Monday. Glad to be back. It was a wonderful, wonderful weekend. We got a nice little trip in there. Thank you to so much of you, or all of you that came and met with me. That was cool. That was a good time. I didn't know so many lived in that area. It was a nice little town. Never been there before, so I was happy with that. We had a great time. Thank you also for the suggestions for Hanging Rock Park. That was so cool. We had a great time there. Anyways, we're here for the stock market update today. This is just a quick class that we do to go over the stock markets, things that happen, the good, the bad, and the ugly. We're here to help. If you've never heard of us before, I'm Dustin Tibbetts with Jazz Wealth Managers. We're financial advisors, fiduciaries that manage our own portfolios. We're doing everything ourselves for you so that you get the best of every possible scenario. So here's what we're going to do. We're going to go through the markets today. I do need to remind you, if you're one of our clients there, you should see, is it there? Nope, it's there. Tomorrow, our Candlesticks Part 2 class. Those of you that like the technical side of trading, we did Candlesticks Part 1. We explained sort of what all the garbage on these charts means individually. Now we're going to show you how to put it all together and understand what individual stocks or the market is trying to tell you, and you'll better be able, you'll be able to participate more with some of the charts that we show. So check that out. Also, we've got a handful of new portfolios coming out. We have a bunch of them. We have to get them all approved to publish so that we can actually offer them. So we have 6 of them available on our website right now. You can kind of go see the different types of investments that we offer, but we have a handful of them coming out to cover all of the other bases that we're missing, and maybe a couple unique ones there as well. Just know we're going to build on that. Eventually, we're going to have plenty of them. We have them all. We just need to get them out there to you, get them approved. Anyways, hey, stock market today. Boy, I'll tell you what, if you followed us for the last few weeks, I kept saying the leaders of the stock market, put the Russell 2000 aside, the leaders of the markets were 5 names, right? 6 names really if you want to count Microsoft. So 6 names, excuse me, pulling the market higher. Well, we kept saying, what happens if those 6 names take a day off? What happens if those 6 names take a couple days off, right? What's going to happen? The markets are going to fall. So we've got those 6 names basically taking a break today. We're going to go through them one by one. I'm hoping this does the trick and we can be over here by the charts. There we go. We'll start with the markets just to kind of go over what happened so far, or what happened today, not so far. The Dow was lower by 144. Here's the chart of the Dow. And I want to point out something too that you may have noticed. So there's an old saying in the stock market when you look at the price of either the market or maybe individual stocks such as Facebook, right? There's an old saying that the bulls take the stairs and the bears take the elevator. And it's really just a roundabout way of saying the stock market goes up gradually, or stocks go up gradually, very easily, just smooth and steady. But when they fall like a rock. Not a lot always, sometimes it's a quick drop and then back to smooth and steady. So the old saying, the bulls take the stairs, meaning it takes longer to go up the stairs. The bears take the elevator, it's faster to get to the bottom. Take a look at the chart that you have on the screen there and you can see that exact setup. I guess I can't stand today. The exact setup here. So you've got these movements, these breathing, the breath in and out that we always talk about. But do you notice how sharp the exhales are? Right? When the stock market falls, it falls rather quickly, and that's because fear will always outweigh greed, right? It'll always pull harder than greed. Greed is easy. So many of you email and you're like, I'm going to buy this stock. It's doing great. It's just going to keep going. I understand. But then it falls and you get scared because you didn't see that coming, right? So, and that happens a lot in the markets. You can look at any one of these. If you understand the candlesticks in here, you can see it, right? Slow, steady move up. Quick and abrupt move down. Slow and steady up, maybe just a little bit less. Notice how that's not a crash there. Just a quick and abrupt move down, slow and steady, and then, oh my God, what's happening, right? So we may be going through another one of those phases of, oh my God, what's happening? And so what we're looking at here in the Dow is just the longer term trend, really steady trend for now. Everything's looking good there. What doesn't look so good is the Nasdaq 100. The Nasdaq 100 is notorious, excuse me, for the bulls take the stairs, bears take the elevator. Notorious for that. So if you're investing in tech stocks or the Nasdaq, you better be ready for that, where you're just moving along, everything's fine, and then smack, you're going to see that pullback. Look, I mean, you can look back all the way, well, from what I have available on the screen here, You've got January, quick slam down. Even in here, just this 3 days, even if you had a profit, that's still a little tough to watch. Well, you've got the same thing happening there on the Nasdaq. And why is that? Well, if you've been following the markets recently, you saw Facebook just completely eliminate more than half of its recent rally. The stock actually gave back almost all of its rally going back to April, so shows you how fast these things can move. Now, it did come off its lows today. If you're a technical trader and you were looking to try to find a short-term trade there, you got excited by what happened in Facebook today. I'll look at Amazon. That was down 2% today. That one's holding up, actually. That's doing pretty good. If you look at Apple, that one's also doing pretty well, not always included in this mix of names. Netflix, go back to would have been Wednesday's video where we were talking about that Netflix won't do anything until it breaks below this, right? That's where the excitement would start to come. And that's just because the trend broke. So when I draw these lines on the charts and I'm trying to show you different areas of where stocks have important or significant price areas, that's what we're showing. And it's just because everybody else draws these lines. And so we said, even from earnings, look, nothing's going to happen unless we break below. Well, today we broke below, and you could see how aggressively that sold off. All of that is just people saying this red line, this is my line in the sand. More people are looking at charts than are looking at the subscriber count. We already know what that is, right? So we're looking at that. They missed on their subscriber count. The stock was already punished. The next line in the sand is the trend line. So you see that kind of suffering there as well. Not a big deal. Google or Alphabet, however you want to look at it, also selling off on the day. And then the other one that I mentioned was Microsoft. That one's been included more in the tech names. Microsoft lower by 2% as well on the day. So look, if these stocks lead the way on the way up, you know what's going to happen when they all decide to take a break. Now, the Russell 2000 sort of hinted that the market was coming to a little bit of a top the other day. We pointed that out when everything else was good. The market had a good day, but the Russell 2000 pulled lower. Did a little explanation on that. What you're looking at on the screen is the Russell 2000. That's still continuing to pull back. So nothing crazy yet, nothing that we're going to get scared of and run away and all that, but still doing it. Let's talk about Twitter. Do you like a discount, do you? Twitter. Holy cow, what a drop in Twitter. Twitter and Facebook, just killer drops here. We'll go over a couple others that have done the same, but a real significant drop here from earnings. Basically what happened, earnings came out late last week on Friday. Analysts got to look over everything over the weekend, rushed out to go to their clients, analysts, all their clients that they have in all these big firms, and said, hey, we think you should take a break on Twitter. They are saying that the price range for them is between 21 and 25 is the new area for Twitter because, look, they missed, right? I mean, everybody looks at their active users, monthly active users, and they even told everybody that going forward, they don't expect their monthly active users to be all that impressive. That makes for a good reason for big guys to sell the stock. I'm just saying, you know. So that's Twitter. Let's cover a couple others outside of tech, right? The world does not revolve around tech, although it kind of does, right? Tyson Foods. So Tyson Foods broke to new lows today, down 8%. Look at this chart. So from, where are we showing here? December all through this year. So the stock's down over 20%. You guys know Tyson Foods, they had the commercials with the chicken and all that. You know what I'm talking about. Basically, the company released their earnings. That came out, and then they said, hey, going forward, this trade war thing, we're thinking that's going to hurt us, and not only now, but going forward. So Tyson Foods, a bit of a struggle there. That's new lows, right? That defines it there, 52 new week lows there if you're following along. Caterpillar says the trade war thing is going to cost some $200 million. Well, they really, honestly, they said between 100 million and 200 million, but the media likes 200 million, so they're going to use 200 million. The stock was higher most of the day. It started closing lower towards the end of the day when everybody got a good look at that. So with that in mind, tech was your worst performing sector by far today, by 100% difference. Tech was down almost 2%. If you look at some of the other weak spaces, you got industrials down on the day and then consumer discretionary. Now, good news, bad news. Tech taking a bit of a break right now. If you can't handle that volatility in tech, which a lot of these investors are starting to say, I'm going to take my money out and go put it somewhere else. That's the key. Where are they putting it? Where is the money going to go? people, the big investors, the big hedge fund managers, the big mutual fund managers, the guys that have to beat the market because they told you they would, they got to put the money somewhere, right? So they don't just pull the money out and then go buy a house with it. They pull the money out and then they go shopping for other ideas. And so where are the other ideas? Well, here's what happens. When money comes out of a sector, and I hate that I'm saying sector, by the way. When money comes out of a space, it moves somewhere else, and it moves to strength and discounts. So I'll give you a good example. AMD, Advanced Micro Devices. Money is very clearly moving from the other tech names into AMD. This is not my opinion. This is just what's happening by looking at a chart. Obviously, the stock price is moving higher, but look back behind here. You see these light gray lines? That's showing you the trading volume. How many shares traded hands throughout the day, okay? Look over here. Well, that's pretty good. That's a lot of volume right in there. That's pretty good. Over here, little spikes every now and then. Now look at the last 3 days. Way above average trading volume, telling you that money's coming from somewhere and it's going into this stock. I'm not saying go out and buy the stock now that it's rocketed up as far as it has. I'm saying that's how you see that that's happened. Go over to a name like Kroger. I don't know why people are buying Kroger, to be honest with you. Maybe it's that clothing line they promised you, but Kroger stock has held up, been nice and strong, and so investors, the big guys, they go look at that and they go, what's already doing well that we can just add fuel to that fire? And Kroger happens to be one of them. On the discount side, you got AT&T. Right? Look at this one. It's a long-term big name that everybody focuses on. Obviously, dividend if you're one of those people. But the stock has been rebounding quickly over the last couple days. Shows you a little money's going in there. Now, the key to this one is this trades an ungodly amount of shares a day, like 60, 70 million shares a day. So to move the needle on this stock takes a lot more than it does on other stocks. So keep that in mind. Goodyear Tire. They've been spiking higher. Look, this is just clearly people making the fundamental play on a discount. So I don't have the fundamental analysis for you here, but if you look at this, somebody clearly has said, they think that there is a fundamental play that this company will do well, and it is currently trading at a discounted price. And so that's why you have all that volume. There's a reason why you have 2 times the average daily volume going into this stock. Like I said, I can't specifically say why I haven't looked at it, but that's just one that sticks out to me. Now, we've mentioned consumer staples and healthcare. Been talking about that for over a month now, how consumer staples has slowly been creeping higher. Those big guys, if they can avoid it, they don't want to tell you what they're doing. They want to go buy the stock sneakily, invest. Then about a month from now, go on CNBC and be like, well, we bought the consumer staples sector about a month ago. And then you rush into it, right? That's what they want. Now look at this. This consumer staples has been slowly creeping higher, steady volume. Look down below here, all these little gray lines, very steady. No real one spike, no big crazy moves anywhere, just real steady every day. Tons of money going into it. So I'm not making any predictions there. I'm just saying, if you're looking for where the money's going, here's a couple ideas. And lastly, I'll do healthcare. Pointed this one out also. We've been saying how, look, healthcare, just slow and steady. It's moving along. And that's the same concept. This is the sector, healthcare sector. Money just keeps coming in there. So if things continue to be bad in the tech space, it is not my opinion. Of course, I'm not making any recommendations, but can you look at a chart and see where money is going and then make that decision if you want to participate? Sure. I mean, not so bad. All right, moving on. That was sort of my lesson for the day there. McDonald's a little higher today. They're going to announce, what is it called? Mac Coin. And at first, now I'll be honest, I fell for it. I checked this out because I thought, oh my God, Mac Coin. McDonald's is going to get into some sort of cryptocurrency. No, if you buy a Big Mac, they're going to give you a Mac Coin. And celebrating their 50th anniversary of the Big Mac. And the coin is good for a Big Mac. So no cash value. Just you buy a Big Mac, they give you a coin, you give them back the coin, they give you another Big Mac. So I'm not sure what to think about that. Let's move on to more interesting things. Oil, back above $70 a barrel, or actually it closed at $69.99. Let's call it $70 a barrel. But oil, strong day today, so anything energy related more than likely had a pretty good day. Let's dig a little bit deeper into some of these S&P names if you want. We did Goodyear Tire, actually. Yeah, a lot of energy stocks higher on the day. Oh, on the downside here, you've got a few things. What stuck out today? Tyson was one of the bigger losers, almost the biggest loser in the S&P. Netflix down 5%. We talked about that. Here come the tech names, right? So Akamai, AKAM, if you're familiar with that. If you're a day trader, you better be familiar with that one. AKAM down 5.5% today. CBS, not a tech name, different story. There's a whole sexual harassment thing with the Les Moonves going on there. No new news to give you there. I'm not going to say anything about the guy. They hired some outside people to come check it out. It's up to them. Adobe, tech name lower on the day. Intuit, tech name lower on the day. There you go. Salesforce.com, tech name lower on the day. PayPal, tech name lower on the day. ATVI, you get what I'm going with this? You getting what I'm screaming here? Going down to, now this is all 3% or lower. That's how bad this was. Autodesk, Red Hat, NVIDIA, all down 3% on the day. So you're feeling it, right? You're feeling how the tech stocks really just took the wind out of the market today. In my opinion, is it time to panic? No. Just a couple days here, right? There's a little weakness. It's headline weakness. It's the kind of thing that we would have normally experienced anyways if the media wouldn't have focused so hard on it. But that's what they do, and so that's okay. We'll point out that not all banks were higher today, but the banking sector held its own, right? And I like that. The banking sector continues to hold its own in this whole, we'll call it wishy-washy market here of the last little bit. So that's what I got for you. If you have any questions, happy to answer them. While you're doing that, I'm going to look. AKS Steel, stocks lower by 3% after reporting earnings. That's a steel company. They're saying tariffs are going to hurt them and will continue to hurt them. It's bringing down X and some others at the same time. I don't know some of these other names. Some no-namers reporting earnings. CBS, yeah, CBS is coming off the low. That's it. That's about all I got for that. So earnings getting fired back up this week too. So if you're, interested in earnings, we'll be covering that as well. That's about all I got, actually. So I see some of you guys are a little bit nervous about the tech stocks. Remember, when you play with certain types of stocks, you're playing with a certain type of volatility. I talk all the time, and we're going to do a class for our customers on speed and volatility. What on earth does that mean, and how are you investing? So you have tech stocks that move wildly. Biotech stocks. Notice how I never mention biotech stocks. We don't talk about those because they scare the living daylights out of me. I don't understand for even barely what they're trying to do over there. And so you got to understand that. If you're messing with something that can whack you with a hammer, no problem. If you're messing something that can whack you with an airplane and smash you, you got to know that that's what you're messing with. So hopefully you don't get too heavily invested in the tech stocks. Now, there's a big difference between tech stocks and consumer staple stocks, right? So they're not going to move at the same speed. Tech stocks are going to move much faster than consumer staples. So on a day where consumer staples falls, you're not going to notice so much. Tech stocks, you're going to feel it when they fall. So anyways, we'll wrap it up there. We'll be back tomorrow with the Doe Show at 1 o'clock, our closing beat, of course. And tomorrow at night, if you're one of our customers, Candlesticks Part 2. That was a very popular class amongst our customers, which makes sense because I know a lot of you are also doing some trading there. So that's cool. I'll remind you, of course, tomorrow. And we'll see you then. If I can help you in any way, you know where to find me. If I have helped you in any way, check us out at jazzwealth.com or at least hit the subscribe button. Really appreciate it. I got a comment from somebody. We went over 20,000 people. 20,000, what they do when they hit the subscribe button. So cool. What do I does YouTube send me something, or I don't know. They've never talked to me, so I don't know. Let's keep going. All right, talk to you guys later. Bye-bye.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.